Good morning, traders, and a very happy Tuesday out there to everyone. For starters, there, hope that y'all had a nice weekend there, Memorial Day weekend there for the U.S. side of things. So we have ourselves a little bit of a shortened week here, but we'll be kicking things off here with a nice Tuesday coming in front of us. And just before we go diving into the charts this morning, a few items on the calendar to make note of. Nothing too substantial. We have a little figure from Canada that'll be due out at 8:30. Not a very large or significant one. And then outside of that, on the U.S. side of things, we have a housing figure out at 9 o'clock, and then consumer confidence out at 10 o'clock, respectively. So a few items to make note of. But with that said, we're going to be able to come over here and jump into our daily charts. Of course, with the shortened day slash holiday yesterday, we have ourselves a relatively mild bar, right? The way it shows up on the holiday data. Just nice and compressed. But what we can consider is how we closed on Friday of last week, right? Coming in with the inside range bar after having the outside range on Thursday's trading, which, of course, by being an inside range bar, we never quite traded on the other side of the low from Thursday. So that was down there at 52.73 half. So we've been keeping it above that point. And now, including the progress from yesterday and taking into account the overnight session, we're still, for the most part, trading inside of the impulse bar that we had from Thursday's trading. In other words, the high and low of it, 68 and a quarter down to 73 half, respectively. There, so not too bad. We're also, if we blow this out just a notch, right, we can also take into account that we're still trading a little bit around previous high test here, basis the futures. Right, that's that previous high test of 33 and change. So if we strip away just that high and low from Thursday's bar, we can also take into account, as of late, just over the past couple trading days, we've had acceptance on both sides of that point. Right, we closed beneath it, and then on the holiday trading yesterday, we kind of closed near it. So it's been generating some interest. It, even though we took it out, it could still be viewed as a reference point, if you would. So that's 53.33 half as being an initial little zone there in the S&Ps, and like we said on that top and bottom of Thursday's bar, just speaking in of the daily charts themselves there, we'll start to get some more detail on the intraday charts in just a moment, but not too bad in their showing. But when we come over here to the 120-minute time frame, start to get a tad more detail in particular, and we don't always have instances like this, but a nice case where we have several data points to work with, right? Meaning several tests and separate periods of the same, data point. So in particular, it's 53.49, even though we did trade through it there last week. We had traded there three separate times and respected the area. So viewing that as being a good reference level to have on the sheets, right? We forge up any further in the S&Ps, running into that 49. Could be a little initial overhead. And then on the same token, just as how we have multiple data points up at the same point up above, down below at this nifty 53.05.75, which we also did some work with last week, right? We kind of tried both sides of the spectrum coming outside of this little coil, and now we're landing right back in the middle. In other words, coming out of this, we had a little extension to the upside. Didn't quite sustain for all too long, so we proceeded to come back through. We did the extension out the bottom, and now we're just kind of coming back to the middle in between, that is the 49 and the 0575. So fairly neutral, coming into the session there with the S&Ps, but I do think this 120-minute time frame should serve us quite well going through our session there today. All right, and then we have our DAX. A little bit of a different feel in terms of what the DAX has been up to lately. What we can say that's similar is that we've been trading around previous high tests, basis to futures, right? This was the trading done at the tail end of March going into April. All these little high tests. So we're still trading at and around this point in the case of the DAX. But what we also want to note is that overnight we had this pretty nifty look above this 18,887 because as of last week, what we were starting to see, we'll use our little tools here again, are the cycle highs in the DAX had been coming in at slightly lower prices, right? So we've had the slightly lower highs and slightly lower lows, but we have made some better progress here. So this is an instance where we have one nice higher high. We were able to come in, look above the 18,887. The thing is that also on the other side of it, which for now it's been respected, but is the nature of the way we came down in the first place. So viewing that as being, lower developed or single print area for that of the DAX. So when we came up and traded into that point, initial testing was met with a little bit of selling pressure. So we're wheeling it back, but for now, we've already kind of retraced here. So what we'll be kind of keeping an eye on is seeing how they want to respond, if at all, here to that 120-minute moving average. All right, we worked off some of this loss of momentum, found some initial footing, and we'll keep an eye, see what type of activity they want to get off that early morning opening there in the case of our DAX feature. But good tone on it. I think in conjunction with these dailies and the 120-minute should be a nice departure point there for our DAX. All right, and then we have the euro currency here on the currency spectrum. Arguably one of the more active futures in the group, including yesterday and coming into the morning session today. So we had a showing there on Thursday. We barely made it, but that was our inside range bar, which was fairly wide. So we closed Friday as a breakout mode, and then once again, a little skewed with the half-day holiday there. But we did trade, somewhat low to high. So in the case of this euro currency here, we're starting to inch our way back to the top of the impulse bar that we had to the upside, kind of a prolonged. I mean, this is just on the daily chart, so they do take a bit longer to materialize. But essentially, a bit of a pullback and working this daily flag formation here. But as well, looking onto that left-hand side, it's not just clear sailing, right? This 1.09 had also been a previous congestion zone in the past, so it makes it a little bit more difficult to just go zipping right through the area. However, on these intraday charts, right, either which a nice 240-minute time frame or a 120-minute, either of which would be all right. We've already come up quite a ways here, and we also did a case where we looked above a previous spike tail high. So even though the EC has been, a admirable advancement that it's had, just keeping in mind here some of the structure on the 120-minute chart, in case we want to consolidate at all, we could have a case where we move down or sideways whilst the 120-minute moving average continues to rise up. So potential for that of the euro currency. Bigger picture, we are showcasing, nice strength coming off of the daily EMA. It's just a matter that we've already had quite a showing there from yesterday and overnight. So any early morning pullbacks or consolidations could be things that we would be on guard for there. So that's the euro currency dailies also in line, 240 or 120 minute to go in line with it should be a-okay. And we have this very curious chart of the gold, right? And this is one where we also want to make note on this daily chart, right? Just because as to where we're testing back into, if we're looking at the daily in and of itself, right, we had this nice response coming off of the daily EMA. We did our price bar overlap, and then we started our extended run feeling to the upside. We did form our balancing act at the top of the swing, so that helped put an end to the extended run. But very nice to know where we came down. If we're looking at the daily charts, just where we closed or settled last week, we essentially were coming down to the inside pocket area here on the daily chart, right, where we had put in a lot of price bar overlap there in the past. You can envision that as being a bit of a volume node for that of the gold. So they respected it, or we've been trying to hold and maintain. The thing is, let me come up like this, just as how we had been using the 5 SMA as a little demand line on the way up. Now that we've had some damage that was done, now the 5 SMA will be kind of like overhead, if you would. So we're testing on the other side of it here currently. That comes in at 23.51 basis the gold. And to go along with that, an instance where we'll see the 240-minute moving average tying in pretty nicely with the daily 5 SMA, right? So we broke down from balance, had nice damage that was done. We've pulled up, did some testing around the 240-minute EMA. First touch towards it was met with a bit of selling, and now what we're starting to see is a little bit more potential here in the gold, right? Because after we have these instances, and we'll see this on a variety of markets and time frames, at the time, if we scroll back the data, we don't really have a higher low at the time, right? I think this is where we left off there on the tail end of last week on Friday's trading. So we came up off the low. We were still working on this retesting phase. So the question always becomes, do we do the failure test, right? Or do we make the full test and continue on? So in the case of the gold, we failed to make the full test down, right? And we've been working on consolidating a notch. So this nice point here, 2360 even in the case of the gold, would give us a bit of that U-turn feeling, right? In other words, we failed to make the full retest down, so that's going to be a reference point up above, coupled with the fact that just because if we do some trading on the other side at 2360, we would still have some overhead to deal with. It's not pure single prints because we did have some overlapping structure along the way, but that's going to be the initial point of interest, seeing as to how we respond around that in the gold. All right. And then we have the crude and the bonds to wrap this thing up. No real pressing major data points this morning. It's just some mild items from Canada, so nothing that should be too overwhelming there. Crude next in the queue here. Still working on a little bit of this bracketing market mode. In other words, the prone to test rejects, upper, lower end of the range, which we've been kind of going through here for a little bit of time. If you chop off like the tails of the bars, it really kind of just shows the essence of where the bulk of the activity has been taking place in the crude. So no doubt we know where we were doing last week there. We made the full test on the daily charts, a look below the full daily low, and it was a short-lived test because not only did we come back to the middle of this previous built-out range, we're now inching ourselves a little closer towards the upper end of it. So in terms of where those points would come in, on like something like a 240 or the daily, 79.45 up to 79.85 is kind of being upside areas, just as how we had the lower end of the range, which we came down to, kind of met it with fading. Would be a little cautious if we start to work ourselves towards that upper end, as opposed to anticipating a major breakout from this. Would be more so in the camp of if we come back towards that upper end of the range, close towards that 80 handle, I would just be on guard in case they continue with the theme of fading the upper and lower ends of the ranges and building themselves out a broader basing area on that 240. So a good item to take into account there with the crude. A little stretched here on the 240 as we come back towards that upper portion of that previous range that we had built out there. And then lastly, and last and least in this point here, just because it's the bonds, which have been narrowing down a notch, or been having range contraction, if you would, after having our nice rhythm up off the lows, nice back-to-back daily green bars here in the case of the bonds, and we can see the change in tone that we go through, right? Nice swinging activity up off the low, our price bar overlap, and now we could see that starting to dwindle or narrow even a notch further. So these bonds here, high degree of price bar overlap. We can start to dissect the intraday data a tad more. In particular, this tail that we left at the lower end of last week, this 116.13 would kind of be viewed more as like a caution zone there with that of the bonds. For now, we're doing a pretty fine job on holding ourselves up above that point. And then likewise, our kind of caution points or more immediate points of interest, 116.13, right? That's more of a caution zone, and then 117.07 just because that's kind of a little bit of a low developed area there over on that left hand side. So that's where we're leaving off there on the bonds, and then always nice to check up on, all right, the yields side of the equation. And we can bring these down a time frame or two. So if we bring these in conjunction with each other, it's just going to be inverse against the bonds, but it's on like kind of a day session view, so sometimes it shows us things of more interest, including where the actual rates are trading. Right? So coming into today, 4.575 basis those 30 years, but what you also see is a lot of overlapping structure, right? Not a whole lot of major defined swings or trendiness taking place as of yet. We're just essentially kind of coiling here on these intraday yield charts. So we'll keep those items in mind there. But with that, we're going to get that lovely 120-minute S&P chart back up, since that's going to give us some nice items to work with there. And we'll see how we continue to develop here in the early morning session. And then we'll bring over either that euro currency or the gold right over by that daily chart, just so we have that to keep tabs on. I think the gold should fit the bill in terms of being a market of interest there for us. So we'll bring over that gold right next to the S&Ps and see how we start to develop here in this early morning session. Once again, we're coming off of a bit of a holiday there on the U.S. bank side of things, so oftentimes takes just a couple extra moments to get themselves sorted out there in the morning, but and we're going to be on our merry way here, and we have some nice items that have opened up in terms of volatility there from last week, so we'll see if we can carry that forward with this week here. So we'll just get a couple things adjusted, line these items back up, and we'll be rocking and rolling here for this Tuesday in front of us.